Having learned about capital, let us now turn our attention towards liability. Obligations or debts payable in future by an enterprise are liabilities for a business. So, if a business obtains a loan from a bank or from any other individual or institution, then such loans are liabilities for the business because the enterprise will have to repay the amount in future. So liabilities are classified under two broad categories, just as in the case of assets. It is categorized as non-current liabilities or fixed liabilities, and the second one is current liabilities. So let us see what are the items under non-current liabilities. These are long-term loans, deferred tax liability, and other long-term liabilities. And under current liability, we have 5 classifications or 5 items. These are creditors or accounts payable, bills payable, short-term borrowings, accrued liabilities or outstanding expenses, and the last one is short-term provisions. The first one is long-term loan. As the name suggests, in this case the money is acquired for long-term purpose. That means the payment will take place over a very long period of time. Therefore, amount borrowed from a bank or an individual which has to be repaid over a long period of time are termed as long-term loans or long-term borrowings. Such money or loan is usually obtained to fund the purchase of long-term assets such as building, machinery, etc. And we will find in case of banks they say about term loans, and there are some industrial financing bank also which finance purchase of machinery, building, construct a factory for a company, and usually the loan is given for a very long period of time, maybe 20 years, 15 years, 20 years or even more. Now this amount of money can also be provided by individuals in small denominations which are called as debentures. Unlike shares, in case of debentures, people provide loans to a company and in return they get a fixed rate of interest. The second one is about deferred tax liability. Sometimes what happens, in order to promote industrial development in a particular area, government may provide an offer to companies who would like to set up business in that area. The offer could be that the companies need not pay their taxes of a particular year in that year, and the company may be given an offer that they can pay their taxes in some future years. Then the company may get little bit more time to make payment for their taxes. This is done mainly to attract investments. But the company which has started the business and made a profit will have to make the payment of tax. May not be in this year, but in some future year. And since there is an obligation to pay up the money in some future date, that also becomes a liability, and it is known as deferred tax liability. The third classification, this is what we call as other long-term liabilities, and one example could be long-term trade payables. Now this trade payable term is usually associated with short-term liabilities, but in some special circumstances these trade payables can also be applied to long-term liabilities. Let us see how with the help of an example. Suppose there is a shipbuilding industry. Now we all know that in order to make a ship, it may take around 2 years, 3 years, or in some cases even more. The suppliers of materials to the shipbuilding company need to wait for more than a year to get their money back for whatever they have supplied. They may have supplied spare parts or small tools, or they may have also rendered some services. Since the making of the ship has not been completed within a year, the shipbuilder may want to make the payment in some future year, maybe after a year or two. So although the money is to be paid for spare parts or small tools or even small services rendered, it becomes long-term liability. Alright. Therefore, this is a special case of trade payables which is classified under long-term liabilities. Remember, normally trade payables is associated with short-term liabilities.